In partnership with kōura KiwiSaver, the Everyday Investor is proud to present News of the Money World, an informative, informal, yet hopefully entertaining look into all the latest happenings in the wonderful yet overly complicated world of finance. Take a look at the world through the eyes of the markets. As usual, all content is provided on the basis of listener beware. Our views are often our own and definitely shouldn't be relied on for any investment decision. Let's get started. Woodstock for Capitalists recently, the meeting that Berkshire Hathaway has every year. And if you can be disciplined enough to sit down for 5 hours? Is that how long these meetings last for?
Yeah. 5 hours on a stadium atmosphere that you got to buy tickets to.
Nuts. So I'm not going to pretend like I read that document, just like I didn't read any of those tax reports that I recently covered either, because that's just crazy. And I have far better things to do with my children than that. So... But you, on the other hand, Rupert, right? Did you sit through
I've got through the whole thing, but I've been through a fair amount of it.
Yeah.
And I think the beauty is the massive amounts of reporting that come out of it. So between that and the highlights package plus the reporting, it's kept most of my weekend pretty busy.
Yeah. Starting first around the U.S. economy and what some of the comments were that slipped out during this, well, it didn't really slip out, that came out of the mouth of these two geniuses here. What does it say around corporate earnings? What does it say about the state of the U.S. economy?
So look, I think there's a couple of things. What did he say? He said he expects his domestic businesses to start reporting low earnings. And so if you think Berkshire Hathaway, they've got tens, if not hundreds of businesses throughout the US covering the railways through to insurance, through to real estate, touching so many different parts of that economy. He said he expects his businesses to report lower earnings moving forward, a combination of higher interest rates, the fact that the government stimulus checks have now kind of worn out, and that created a sugar hit last year, means there's just no way his businesses can go forward from here. And I think that's pretty interesting because there are very few fund managers or CEOs that would be quite so blunt as to say that. You also have to overlay that for the fact that, his businesses do touch so much of the US economy. If he says it, you're going to listen. The other thing that you saw happen is that he actually sold down his stakes in a number of businesses. He sold down things like Verizon and other cyclical businesses, and he took them all the way to zero. And saying that, he did still kind of invest in a couple of other big things. So Apple, Chevron, some of his big Oxy, some of his big favored holdings, he did increase the holdings in. But if anything, we see him moving away from cyclical and back into that kind of value play. If anything, I'd say that's really preparing himself for recessionary territory. Or don't saying that commodities aren't necessarily recessionary territory, but he's playing in those very few spaces at the moment.
Mm-hmm. And I kind of think of it like I don't know if you have grandparents still alive, I don't, but if I was to show it to my grandparents and actually talk to them about current events in technology, they might not have a clue, but with these guys, they kind of know what's going on. And with, say, the banking crisis, I've heard a lot from different people around the banking crisis, but when you see Warren Buffett talking about the banking crisis, it kind of takes on a different meaning because it's like, oh, you're watching that as well. You can see that too. Well, what do you think about that? So what were you kind of taking it? And there was a couple of things that he said around that just made me get a little bit curious based on what happened during the global financial crisis. So do you want to talk to me about his views around banks there?
He's clearly got some strong views. He did turn up with two placards. One said these things held till maturity and the other held for sale. So he's clearly got a few issues with the accounting rules. And I think he's pretty clear that, well, to be blunt, he thinks they're bullshit, which most people at the moment would agree with. Look, he made some interesting comments. He believes that the execs in particular really need to be held accountable because fundamentally they didn't understand the risks they were taking. A lot of these execs, and I think this is starting to come out from Silicon Valley and Signature in particular, have made a hell of a lot of money over the last 3 or 4 years. But they've done it by personally, they've made a lot of money because they've been paid all their incentives, but they've been doing it by taking risks that people weren't aware of. It's pretty clear. He believes the bailout needed to happen. At the end of the day, if the FDIC and the US government hadn't stepped in to guarantee the deposits, then it would have been an absolute calamity and there would have been chaos. So he's not criticizing any of that activity. I think what he would like to see is now he wants to see the regulators starting to go after some of those execs that clearly got paid really well and haven't been seen to do anything so far. To my mind, this is really something that I also am a big believer in. I think we've become very good at socializing a whole lot of the losses, and we're privatizing the profits. And to me, he's kind of taking that to the next level. The other thing I found fascinating on some of his bank commentary, back in 2008, he was that lender of last resort. He was the one that stepped in and gave a huge amount of money to Goldman Sachs, American Express, Ford, some of the other big corporates as well. This time, and actually in 2011, he stepped up to Bank of America, and he's still got that as a very large one of his holdings. This time, he's been very clear. If anything, he's been a net seller of US banks in that last quarter. And I think to me that implies, because he's very good at sensing an opportunity, he's also been very good at playing regional America for a very long time. I interpret that as he thinks there's more to come. He thinks the carnage that we've seen over the last couple of months, there could be more. Because otherwise, look, why wouldn't he be getting in? He's clearly not happy with the risk-reward trade-off at this point in time.
Which is at odds almost with what we've been led to believe, or some of the messaging coming out, especially out of the Fed, that, hey, it's unfortunate as we had to step in, we took care of things, nothing to see here anymore, we're all good, we're solid, we're safe. Sort of kind of the message, I guess. And then you'll hear people like Jamie Dimon step in and say, hey, we need to, I'm pretty sure it was Jamie Dimon from JP Morgan kind of stepping in and saying, hey, we need to ban short selling on banks, which...
Despite the fact that it's his traders doing the most of the short selling.
Yeah, that's right. Interesting, isn't it? Yeah.
That is a big digression, but that's what we do. There's a great article that on one hand coming out saying the banking crisis still hasn't finished yet. They have to ban short selling. And then he also said, my teams have kind of given me presentations and analysis that shows this isn't the fault of short sellers, but I just don't believe them. Which I found fascinating because he doesn't believe them because that's how they're making all their money.
Yeah. Interesting, eh? Now, I think Berkshire Hathaway or Warren Buffett has been criticized for holding too much cash in the past. I think that's probably actually last time we spoke, maybe, or the time before that, we were talking about how much cash he had. Just over, I think, $125 billion in cash. Slightly large in terms of an emergency fund, just taking a personal finance lens on that. But with that kind of money, normally that is a significant opportunity cost that you'd be facing sitting on that kind of cash. But with interest rates like what they are right now, that's like $6 or $7 billion just in interest revenue. So, but that's not the main story. The main story is that he's waiting for some bargains to materialize, hence the term elephant hunter. So if we were to speculate, what would be some of the elephants that he's trying to hunt with his big wad of cash there?
Oh, it's a great question. I haven't quite thought hard enough about what the elephants are, but I think what he said in the past is that to make it worthwhile and worth the time and worth the effort, he needs businesses that are that he can put $20 to $50 billion to work at. And so again, this, in my mind, this is likely to be some of the large utilities. Given some of the valuations that we're seeing, I wouldn't be entirely surprised to a company, the power distribution electricity companies in the US, where he's going next, because he's gone very long in oil and gas, and he's done that through the Japanese investments, through Occidental, through Chevron. But yeah, it's that combination, right, where he wants safe, solid businesses that are not altogether really difficult to manage, yet at the same time he needs scale. And so yeah, I'm just thinking completely off the fly here. Utilities feels like the place. Edison Energy, one of those kind of style companies that I would not be entirely surprised to wake up and see that he's teamed up with someone to make a bid for.
Mm-hmm. Yeah. And so there's also a couple of interesting lessons that have come out of this, or I don't know if you'd call them lessons or not, or just key themes, but diversification versus diversification. I've never heard it called that before, but do you want to talk to me about that one?
Well, I think one of the big criticisms that they got from a number of shareholders is that Apple has now become the largest public equity investment that they own, and makes up 35% of their public equities portfolio. And saying that, as they did remind, there are a number of other investments in their book. So it might be, 10% of their total portfolio. But there's a kind of a bit of criticism about how it's become such a large, oversized point, and the questions were really around: do they see that as safe, prudent investment, particularly given they're still increasing that investment rather than decreasing as well? But I think this is where Charlie Munger came out with this really interesting comment, and he said, "Look, if there are 3 or 4 great opportunities, I'm going to invest in 3 or 4." He rounded on the business schools and thought that a lot of the risk management conversations that we have, we're kind of diversifying for the sake of diversifying. He called it diversification, and he'd much rather take 3 amazing investments rather than 12 or 15 investments and hope that some of them work. He did comment pretty strongly that, in his view, Apple is by far and away the best business that they own, and better than any of the businesses they own 100% of, and that's why they keep on going. But it's really interesting, right? Because it does fly in the face of all of the traditional finance theory, letting a single holding become such a big part of a single portfolio. There are very few managers in the world that would get away with that, and even less that would be proud of that as well.
Mm. Do you think that, I wonder, I know they had some exposure with banks long time ago, 40, 50 years ago. Crazy to say those number of years in the context of this. These guys are old people, right? So they had banks. Then there was some new legislation that made it, I guess, somewhat less attractive in the late 60s, early 70s. Got out of banks. They tilted more towards insurance companies. I just wonder if through Apple, they see maybe like another opportunity to get some exposure into something that, yeah, it's tech now, but clearly with the direction that Apple is going, it's more than just tech. And I don't know, maybe he's seeing ahead. What do you think about that idea?
Look, I think he's definitely seeing ahead, and he's seeing the trends of where that business goes. But if you think about his core ethos and his core way of investing, right? He invests in businesses which have very strong management teams and have a very strong moat. And I think, 5-10 years ago, you looked at Apple and it was an iPhone manufacturer, and went, it's got a phone, but who knows, and see what it is. Today, it's got this whole ecosystem that ties people in. Means that people are tied in. They've got an iPhone, they've got an iPad, they've got subscriptions coming through on an iCloud account, and it's like Microsoft. It's really, really, really hard to break out of that because of their very, very strong moat. And so, yeah, I think he might be seeing future and he might be seeing things, but fundamentally, I think Apple is about as strong a traditional Warren Buffett investment as you will ever get. Tim Cook, widely regarded as probably one of the best. JP Morgan, just Jamie Dimon might be one of the others. The best CEOs in the game. And then you've also got this moat, which is the Apple business, the iTunes, it's not really the iTunes, but that services business. It's pretty hard to see anything knocking it off its perch. So I actually think Apple has become, if anything, at kind of 15, 20 years ago, it has become the exact business that we would have said 15 years ago that Warren Buffett would be buying.
Mm-hmm. Okay. Moving on. So I'm just looking at a note here. BYD, which is a Chinese electric vehicle maker, he invested $225 million in BYD in 2008, and in July last year, it was worth $9.5 billion. Good return?
That'd be nice, wouldn't it?
That'd be awesome. So he loves the company, but obviously there's something that's concerning him. Do you want to just speculate? Like, we're talking about electric vehicles here, and before we started, we were talking about how Ford performed during the Great Depression, how it slipped. Do you want to just talk to me about that?
Yeah, so just for those that are unaware, BYD is the largest China electric car manufacturer in China. It's really seen as being the Chinese version of BYD, of Tesla. And I mean, here in New Zealand, you see a lot of them out on the streets at the moment. Apparently, they're very good, very nice cars. So he's been selling down slowly since August last year, and there's been a bit of speculation Is this to allow him to have a tilt at Tesla, or was he about to kind of invest in Tesla in a similar way to what happened with Apple kind of 7 or 8 years ago, where he kind of took him a long time to get there, but now he's by far and away the largest shareholder in Apple. But when he was asked this question, he answered really bluntly. He said that he basically just doesn't like the auto industry. He made interesting comments that he has got no idea what the auto industry looks like in 5 years, let alone in 10 years. Talked about how in 1908, Ford launched the Model T. And they were by far, they kind of introduced America to personal automobiles. But yet by 1930, they were losing money, had gone from being number one in the market to number 3 in the market. And I think look, that's potentially unfair. But actually the two competitors managed to stay profitable through the Great Depression as well. But I think he used that as just a really good example of it's manufacturing. He doesn't really see the moat that they have. It's a capital intensive business and you just always have to be on your toes and you're never sure who's going to win. And I thought that was a really kind of interesting perspective. I know there's always been the consistent debate around Tesla. Is it a car manufacturer or is it a technology company? And I don't know what's what. I think the truth is that most manufacturing businesses now need to be technology companies as well. But yeah, it's kind of pretty interesting. He is clearly looking at it as a pure play auto manufacturer.
Do you think that could have anything to do with just the China piece, though? Like, do you think he's kind of worried where things could go there?
Yeah, I do. Because he made some other interesting comments where he talked about Taiwan, and so he talked about semiconductors, and I can't remember. He invested in a Japanese, I think it was Japanese semiconductor manufacturer, and he's kind of said he loves the sector, he loves what they're doing, but he won't touch Taiwan at the moment because he believes that the politics are too toxic, and he also believes there is significant risk around the geopolitical situation. And so I suspect you're probably right that there is a little bit of that with BYD as well. As the situation has deteriorated a lot, I think we're probably a bit immune from a lot of it here in New Zealand, but it does continue to deteriorate. And that's going to start to kind of potentially put American investments in China at risk, and vice versa. We've already seen a decent chunk of activity with the new audit rules and regulations where Chinese companies making it harder and harder for Western companies to audit, harder to hold Chinese companies to Western standards. And so I'm guessing he's starting to see a bit of that trend coming and probably just wants to be out before that gets any worse.
Mm-hmm. And shifting more to energy now, because you've kind of touched on this before with, I think it's Occidental Petroleum. Hey, please excuse the quick ad break. Where's your KiwiSaver invested? You don't know? You don't care? Well, with kōura, you have the ability to invest some of your KiwiSaver into some pretty cool things, which kind of makes it hard not to care about. Property, clean energy, and a carbon-neutral crypto specialty fund. These are all now available to bolt on to a plan that's been tailored just for you using their digital advice tools. To learn more about kōura KiwiSaver and their specialty funds, check out the product disclosure statement and visit kōurawealth.co.nz. Now back to the show. The transition towards green energy could take a little bit longer, and in the process, we might need to be using fossil fuels a lot more to actually aid in that transition as well. And so if you were trying to invest, like excluding fossil fuels, you're not doing what Warren's doing. So it's another one of these contradictions, right? What's the deal with that?
Look, I find it, Warren's in his own little world, right? And he's an amazing investor. And but yeah, he's going big on oil and gas right now. There's no question, right? So he's taken a very large stake in Occidental Petroleum, one of the largest non-oil majors with control of the Permian Basin in the US. They've taken a 23.6% stake in Oxy, and they have they have warrants to go a whole lot higher. He's pretty clear. He's got and again, coming back to a little bit of the geopolitics, he's got a strong view on oil, US production. He thinks that it's going to become increasingly political, and therefore having domestic supply in the US is going to be important. But he's also bullish on the medium-term outlook for oil and gas. Not only has he got Oxy, that 23.6% stake, but he's also got a significant share in a stake in Chevron. I think Chevron is the third largest or in the top 3 of his other public market investments.
Yeah.
So he is going very, very, very big in this space. I think he's counter to the narrative that oil and gas in decline. He's a firm believer that the valuations that they're currently seeing mean that they're justifying where they are, and he believes that clearly believes that transition is going to be a lot longer than people are currently pricing in to some of these companies.
Yeah. Okay. How are we doing here? We're getting through these things. I'm surprised that we're making this progress. I must confess. Okay. Let's talk about Japan then, and see if we can derail our 2 minutes per question here. So, Japan, weak currency, strong economy. Yeah. Like, tell me, he obviously seems to be quite involved with Japan. He's pulled off a couple of moves in the past.
So what he's done is he's bought into some of the big Japanese trading houses. So I'm sorry, it's on my head. I think it's Sumitomo and Mitsubishi, are the 2 that he's bought. But so he's taken significant stakes in these businesses, and more importantly, he's kind of been pretty vocal about the fact that he wants to sit down with them and figure out more that they can do with. Just a little bit of context, right? The Japanese trading houses were initially set up. So Sumitomo, you've seen a lot of that here in New Zealand. They've been a big forestry owner, still are a forestry owner. They've got kind of wood processing. They do a huge amount of oil and gas. They do commodities. These are all companies that were set up to basically go around the world and get their hands on raw materials and commodities to bring back and fuel the Japanese industrial machine, the post-World War II industrial machine. And so these kind of companies have, they're very, very, very diversified with industries all over the place, and kind of everything from chemicals, raw materials, building, you name it, they do it. And so if anything, I'd argue that they're kind of mini Berkshire Hathaways in their own right.
That's right.
Businesses.
Yeah.
And so he's kind of put a lot of money into these businesses over the last 6 months. He's done very well out of that already, because he kind of bought them, and their share prices have lifted significantly since. But he's made it pretty clear on the reasoning for it. He loves their commodity exposure. He likes the Japanese economy. And we all suspect that a big part of it is the fact that the Japanese yen was pretty weak. What's really interesting about it, we talk about elephant hunting a little bit earlier on, and I do wonder whether he's hoping that he can get one of these, similar to what he did with Heinz and some of those other big acquisitions, whether he might be lining up some of these Japanese trading houses to partner and kind of look to buy stuff, because I think that would be all of his big acquisitions so far have been in the US, and highly, highly competitive market there. And so it might be easier if he kind of partners with one of these trading houses to try and do something in the international markets as well, particularly if he's going to do it in Asia.
Mm-hmm. Interesting.
He has been quite clear, though. He does really like Japan, and he likes the geopolitical stance of Japan versus Taiwan, the other big developed economy there.
Yeah. He sorted out the will with the kids. He's got his affairs in order, hasn't he? Like, what would you say? When's this old guy going to pass away? When's he going to kick the bucket?
Well, he seems pretty strong, right? I mean, he gave, like he likes to give advice on everything. He gave some interesting commentary on succession planning. He talked about, how far Greg is involved in the business and how he's more than comfortable to hand that one over tomorrow. But what was probably equally puzzling, I thought, was his commentary around wills. He talks about how he kind of updates his will every year, and he gets his children to read it every time before he signs it. But he's kind of very, very clear that everything is prepared, nothing will change, and then it's just status quo. I mean, the big issue will be the complexity of that beast, and whether anyone else has got the ability to hold it all together. I mean, because what's quite fascinating about Berkshire Hathaway is they break every single one of the traditional corporate finance rules, right? He refuses to pay a dividend. He's made it clear that one dividend that he did pay a long time ago, he sees that as a mistake and they should never do that again. He doesn't kind of believe in diversification. He kind of has made it pretty clear that even though he thinks most people should just be investing in passive funds, and should just go into a Vanguard ETF tracker with their savings. He won't do that. And so therefore he's kind of built this sprawling portfolio of businesses in the US. And so I think that's where it's kind of fascinating, right? And what everyone is kind of a little bit worried about is when he's not there, can you actually hold this thing together or not? And it's going to be a real tough sell for Greg Abel to build the trust of the investment community to keep on getting where they need to.
Yeah. And going back just to, because I have one question I want to ask you just around one of his views, is going back to like Apple, right? So there was a time where he wasn't into Apple, and now he's almost too into Apple. Maybe that's why there's a big bite taken out of it, right? They ate it. That's his bite. It's about 35%. So I just want to know, like, what do you think about his views on Bitcoin? Is it still rat poison or rat poison squared? Or maybe I think that's Charlie Munger who probably has that view. You think they might soften and hold a little bit of their cash reserves, convert that to Bitcoin?
That'd be nice.
They're worried about, like, they don't want to touch banks, and they're concerned about a slowdown. Obviously, in between there is a systemic risk, I would imagine. So how do you hedge out against that? He experimented with gold, but I don't think for these reasons in the past. So yeah, like to me, it seems logical, but it's just not something that he's doing, and makes me wonder if, I'm a schmuck or he doesn't know it yet. What do you think?
I don't know. I mean,
you don't want to rule out the fact that I'm a schmuck, though, right?
Oh, definitely. You're not a schmuck. Well, actually, no, what I think is we're both schmucks together, which is why it's quite fun. What I think, look, they're pretty clear, right? There are a few comments in there. It's a toy thing. It's a play thing. It's not real. Probably not quite as violent about it as they have been in the past. Though I can't remember whether there was a question or whether they said it proactively, but there was commentary around when they're talking about, will Bitcoin replace the US dollar? And they just started laughing and said, no way, no how. So I think on one hand, their views haven't changed, but we haven't had the rat poison comments, all of the scam comments, a lot of that stuff kind of seems. So maybe we are going through a bit of a softening.
Who knows? So, like, wrapping it all up, though, as we come for a landing here, Berkshire Hathaway is the annual general meeting. We're talking about Warren Buffett, Charlie Munger, two very, very old people. Charlie Munger is 99 years old. He looks it. What do you think? Are we going to see another one next year? And what do you think is going to happen? Like, what do you think is going to be topical next year, considering we wouldn't have been able to predict what they were talking about this year? What do you think they might be talking about next year if they're alive?
It's a morbid way to end the question. I hope they are there. I suspect they will be there. I think next year we'll be talking about a few things. I think one of the biggest ones will be, I think they will find themselves an elephant. I think what we're starting to see around the world and in this corporate landscape at the moment, opportunities will present themselves. And as Warren Buffett said, people always do dumb shit, and people doing dumb shit is what creates opportunities for people like him. And we're kind of starting to see a little bit of the dislocation appear with interest rates and all that kind of stuff. So I think in 12 months' time, we will be kind of talking about querying how those businesses have performed, and whether the downturn in earnings that he's predicted, how bad that's been and how long that's going to last for. And then the second thing, we'll be talking about the amazing elephant that he's purchased that no one else saw. I wouldn't be entirely surprised if it's not in the USA. And it's done, as I said before, with the assistance of some of these Japanese trading houses. But yeah, he's made it pretty clear. He's got at least one big acquisition left in him. And to how you phrase the question, if he doesn't have a huge amount of time left with us, he's going to have to make that acquisition pretty soon. The one thing, which is he's built his career on patience, but how much patience has he still got when that $125 billion of cash? I think that's the big thing I'm curious on.
You know what I'm curious, though, is, again, it comes down to their age. These two old guys here on the stage are so old, they're doing stuff that I wouldn't say necessarily it's low stress work, what they do. Massive responsibility, huge fund that they're effectively responsible for all those years. how has stress not taken them out? Or have they been able to afford some sort of elixir of youth that the rest of us haven't discovered yet?
But what's even more important, what's more important, but amazing, is that there's two of them, right?
Yeah.
You go, like, you think you find one 98-year-old that can operate at that level. But there's probably only two 98-year-olds in the world that can operate at that level, and those are the two there.
And they know each other, and
it's truly amazing, right?
Yeah, they're probably cyborgs. That's my guess, right? They've figured out how to...
Maybe the elixir of life. I hadn't thought about that, but there's clearly something going on.
Or lizard people. One of those two things. I don't know. Charlie Munger for sure, right? Look at his face. Anyway.
Or maybe it's all AI.
What's that?
Maybe it's all AI.
I can guarantee you it is. Yeah.
They've got holograms, and it's all them. They're pre-recorded from 15 years ago.
That's right. Yeah. Or it's the sea's candy. There's something in it. It's just, I don't know. Anyway, that's good chat. Like next week, I don't know, we haven't really talked about this yet, but I'd love to talk to you about the debt ceiling, whether that's a big deal or not. There's a lot of interesting stuff that's going down. We are spoiled for choice, so we might need to do one of our lightning rounds around the world.
Definitely be a lightning round. Debt ceiling's going to be good next week because we'll be 1 week closer to the end of the month deadline, and Republicans are playing more and more hardball. So I think there'll be that. Plus, plus we've got some elections in Thailand. Plus we've got 4 or 5 other things that are going to make it really interesting for the world economy that are happening over the next week or two.
Yeah, awesome. All right, well, looking forward to that one. We'll see you next week.